Maybe we shouldn't be starting with this chart. We should be starting with the 4 hours and the lower charts. But anyway, what we mean to show is that the current segregation that we're seeing here on the daily chart is related to the 4-hour chart. So it is holding, it is positive. Okay, this kind of segregation that you find here, it's a 1 2, there's an internal 1 2, there's a 3, there's going to be a 4. All right, and the market is actually moving up in an ending diagonal, we expect. Okay, so this current wave 3 that we are seeing here should be taking us to 4,600 and 4,000, I believe, already tested, and 4,450. We did, I think, 4,360. All right, so let's continue with the analysis first. So that wave 3 is not yet finished. Okay, and we would want to buy into it as we move into internal segregations of the 4 hours and the 1 hour and even the 15 minutes. You'll find that that wave 3 is not yet finished. There's very little negative momentum, and that the market will be moving, we expect, higher. I'm not sure across the weekend, but as early as next week we'll be doing that level 4,650. So we want to have an entry up front right away. We'll take a very detailed look at the shorter term time frames, 1 hour and 50 minutes. Okay, so of course we only buy half size so that we are prepared to protect our entry should the market move lower. So we're buying that half size, I believe, at around even $4,000, between 4,000 and 3,900. We will take a look at exact levels on the 1 hour chart, but you would want to engage at these levels. So if this is not really correct, okay, we're going to be having, of course, double heads here. Instead of that shoulder that you are seeing, you are going to be having head. This is based on the fact that we break higher as a pattern, and at that point we're going to be doing $5,200. Why are we doing $5,200? Because these are projections of 127.2% and 138.2% of that cycle 3. You can see this cycle 3, this yellow 3, this is a complete cycle. So 3 to 4 is a complete cycle. Okay, so this is cycle 5 now. This is the same cycle. This is cycle 3, same cycle amplitude, really, but bullishly translated. Some kind of a development has affected this cycle, and it has become stronger and will have a higher amplitude. So it did reject that the old cycle top here at that level 3, fell something like 50%, and now broke above the cycle top, which is a very, very positive development. The very least that it will do this cycle, because it has broken above its own cycle top, or the normal cycle amplitude for this kind of large cycle, is 127.2, which is 4,900, most probably 138.2 above the old cycle top here at 3. So you're looking at, of course, 5,210. If you take a measure of the whole cycle amplitude from the point of start of 2 here, level 2, all the way to 3 here in yellow, and you carry the same measure to the current cycle start here of 2, because we are doing a multiplication of this higher degree cycle, then we'd use the same measure again out of start of 2 all the way to the market top. For the same cycle amplitude, you'll get 5,000 above, even 5,210 or 5,300. We're trading that signal, that blue signal here. All right, this is a zero line rejection, a very strong signal. We're of course above overbought. Earlier yesterday we said we have to understand the kind of signal that we are trading. What are we actually buying in or selling in, so that we know the extent of the correction into which we will be engaging the market. We're above overbought here. This is a daily chart, and this will linger maybe for 2 weeks. Just going all these histograms, we'll have one slightly below overbought, one slightly above overbought, one slightly below overbought, one slightly above overbought. 2-3 weeks down the line, maybe at least 2 weeks, I expect, always not falling below this point. What is this point? This point is a higher degree top of internal 1. There's a 1 2 here. All right, just at that level. Okay, so this is your wave 3 extension, and any negative momentum you find on the 15 minutes and 1 hour charts, okay, you will find that probably it does not fall or sustain below oversold levels for long. All right, oversold levels are these dashed gray lines here, and at that point, if you check the 1-day chart, you'll find that you are always contained at this dotted gray line. So why are we taking note of this? Because we want, of course, to monitor the corrections when we buy into them. We want to make sure that the market will not really go down on us and that we are holding a strong asset. All right, so we are now quite sure of this segregation. Okay, we expect that the market has done now two shoulders. That old cycle is the first shoulder. The attempt to break above the market high is the second shoulder. The market already broke above that old market top. This is a valid breakout. These kind of markets will not look back. We have to buy half size, hold to 5,210. All right, we expect that we're moving in an ending diagonal. Okay, if we are not correct in the market for any reason, there is a fundamental micro development that is negative, the market will depreciate. All right, we have already bought here above level 1. We're seeing an internal cycle that will take us to the top of higher degree 1, that green one that is showing here. Okay, of course we had half size at that point. All right, at that point it could happen that this is a micro negative fundamental. We'll be seeing an inverted head and shoulders that you're seeing here. The head and shoulders would have done that right shoulder. The market is good again to go all the way to 5,209 if momentum has not fallen into degree 3 negative momentum on the 1 hour chart. Even then it could be just a cycle extreme, but we would take a very serious look at it and we would of course reevaluate. A bounce here again would simply mean that you've done an inverted head and shoulders at that neckline and we're still going to 5,200. If we are in doubt, all right, a bounce here would also mean on the negative side that you're having two local heads. That shoulder becomes an edge and that other head here becomes an edge. The market is here at that point, maybe lower than level 1. Lower than level 1 would mean that we're doing a right shoulder. Okay, so we have a left shoulder, we're doing the right shoulder, then you're gonna get a head and shoulder formation, double head and shoulders formation, and the market moves lower to that next neckline, top of 1. So of course we get out at the right shoulders. At the right shoulders will probably get you out at something like 3,300 or 3,350, these levels here. Remember, we will have bought something like 4,000 and added at 3,200. So we are averaging something like 3,600 to be precise. At 3,350 we will be incurring a loss. We will be of course incurring a loss of something like $250 for one coin. Of course, in relation to the kind of gain that we are looking at 5,200, we have these more detailed on our internal trade management charts. It is of course just 2.5% and in the permissible levels. If you find that the bounce at the top of 1 here takes you above level internal level 1, this dashed green line, then of course we're good. All right, this is not going to be a shoulder, it's not going to be a negative reaction. Bounce at that top of 1 is 50% between the two necklines. If it takes out level I here, this internal Roman degree 1, we're actually bouncing at 38.2% of the uptrending Elliott structure. We're still going to 5,209. It's most probably a very strong buy opportunity. The red arrow here at 2,800 shows that if you get to see that price 2,800, if the breaks out of that neckline, out of that second neckline, and even out of that neckline top of level 1 all the way down to 2,800, we do not implement the stop here, but we seriously consider that we're really seeing double heads and the left shoulder and the right shoulder. We will be below the neckline. We get out at the right shoulder just as already specified, 3,250, 3,350.